Why do we pay such high taxes and get such poor infrastructure in return? And this is normally the complaint you'll hear from middle class Indians or upper middle class Indians living in urban India, especially this time of the year when the monsoon hits, the roads are flooding, and you just a lot of traffic, and you feel like between the mosquitoes and the traffic, you're just not getting bang for your buck as a citizen. Now, the reason why this is normally the complaint is because it's normally true. And it seems like the government wants to address a portion of this by relooking at the GST structure. Now, GST was introduced back in 2017 and it has not been reviewed at all until today. And the government has finally decided to review it now and made some big changes. In this video, we will look at these changes in three pockets: what the changes are, how they will actually impact your life, and how they will impact the big scale things like the economy, the stock market, and some specific sectors. Okay, before we start, remember, like, share, subscribe, and sign up for our membership if you can. Okay, so this is what we had. Earlier, we had a multiple structure or multiple slabs of GST, and many items that fit into or were categorized as luxury that shouldn't have really been looked at as luxury. Now the government has changed it into a simplified two-slab structure. In order to appreciate the two-slab structure, we have to look at the earlier structure. So give me a minute on this. Earlier, and by earlier I mean it still continues until the 22nd of September where the new system comes into play. So starting 2017 till now, we had a 0% slab. So anything, any food that was sold loose, that was not packaged and priced, was in 0%. So if you bought rice, for example, from straight out of the bag without it actually being packaged, or dal, or atta, or fresh vegetables, these things were all milk. This was all 0%. So it was meant to protect the poorest household at 0%. 5% was for any packaged food item. So edible oil, tea, coffee, milk, medicines, anything went into the 5% category. 12% slab was for processed food, butter, cheese, ghee, that sort of thing, mobile phones, things like that. 18% came in for consumer goods. So soap, shampoos, toothpaste, hair oil, if you went to an AC restaurant, insurance premiums, financial services, that was at 18%. 28% was what was considered luxury. What was luxury? Two-wheelers, cars, ACs, washing machines, refrigerators, dishwashers, televisions, aerated drinks were considered luxuries. And then on top of that, there was a cess of 28% on what they considered sin goods. So cigarettes, tobacco, pan masala, luxury cars, SUVs, which would take it finally to a 40%. So it was a complicated system. Where are we now? That has been junked and we now have a two-slab system. So 5% and 18%, correct? What is in 5%? Almost all your daily essentials. So rotis, parathas, paneer, milk, butter, cheese, ghee, shampoo, toothpaste, soap, hair oil, stationery items, all of these things that you use on a daily basis have gone to either 0 or 5%. So they're becoming sharply cheaper. Remember, they were up to the 18% category up till now. Aspirational middle class goods, washing machines, AC, TV, motorcycles up to 350cc, small cars have all shifted from what was the 28% category now to the 18% category. So we have the 5% or 0, which is basically stuff you have to use every day. Aspirational stuff is at 18%. The big change, which I am personally very happy about and very grateful for, is that insurance premiums, so your health insurance premiums, your life insurance premiums, now have 0 GST. And this is really important because we need to get everybody to buy health insurance and to buy life insurance. And earlier they were at the 18%, especially, for people like senior citizens, there have to be like completely tax-free insurance available. And now we have that. So that's a good thing. So to Finance Minister Nirmala Sitharaman, thank you from me. Luxury harmful goods. So sinful goods, cigarettes, pan masala, aerated sugary drinks, large SUVs, motorcycles above 350cc, yachts, sort of personal use aircraft, so private jets, are at the 40% category. Electric vehicles are at 5%. So in short, everything that you use every day is either 5% or 0%. Anything that is middle class is 18%, and anything that is super luxury If you're the kind of person who has a private jet or a yacht, you'll pay 40% on that. Now, this is simplifying it. This will actually bring down the cost for a lot of daily items. And the next question that we have to ask is why now? After 2017, and the opposition has criticized saying you've taken too long to do it, but why is it happening right now? Now, India is under pressure, as you know, because of the tariffs introduced by Donald Trump on any goods manufactured in India that get shipped to the US, other than, say, pharmaceuticals. What this does is that it will put pressure on Indian businesses and it will bring fewer dollars back to the country in terms of revenue. So, what the government wants to do is boost domestic consumption. Remember, we have among the largest consumer markets in the world simply from sheer numbers of people who have to buy, say, soap and toothpaste on a regular basis. So, we boost that and we sort of bolster our own economy because our own people are buying and spending money. And so we're not so dependent on money coming in from the US. What it will do is basically put more money in hands of people to spend, and they will stimulate the economy by maybe buying small cars, maybe actually investing in housing, or putting money down for a home, buying more FMCG, consumer durables, and that sort of strong demand might offset the pain we will face on the export front. There'll also, of course, there's an election coming up in Bihar. This will help there. It will help in other states that are going into elections as well. So there is a political angle to that also. Now, not everybody is celebrating because remember, a portion of the revenue that used to come in from GST would go to the state governments, and now they're going to lose out on that revenue. So there are several state governments that are not happy. Kerala's finance minister says the state could lose 8,000 to 10,000 crore rupees from these cuts. Tamil Nadu has said that they are also worried about their revenue. And they are actually considering at this point introducing perhaps extra tax or cess from the state government in order to bolster up their own revenue. But let's take a look at the second bracket of what we're looking at, what this means for you. Lower GST of food, insurance, household goods, which means you will have a little more money left in your hands at the end of the month. You might be able to buy small entry-level cars. It'll be, might come down by back of the envelope calculation close to 1 lakh rupees, which would be interesting. Insurance will be, like I've said, cheaper, so please buy more insurance. And there's possibly hoping for a revival in FMCG. Remember, in a previous video we talked about the fact that FMCG manufacturers, people like Dabur, people like Hindustan Lever Unilever have said that Indians are not buying as much soap, shampoo, toothpaste as they used to, or we thought they would. That might actually come back as well, and that will be an important thing. Impact on the economy. There's already been a review of what we expect our GDP to do from most people who are watching it by 1 to 1.2% from this cut over the next 4 to 6 quarters. So the year and a half or so, we are expecting our GDP to improve by 1.2%, and that's important. So in short term, prices will drop, demand will rise. Remember, we're going into the festive season. People tend to spend more during the festive season. In the medium term, state governments will face revenue pressure, but it's hoped that basically because the economy improves, people spend more money, you'll actually be able to recover that money. And long term, if demand holds up, this could actually mean you'll start up a new cycle, perhaps, of better investments. See, if companies make money, they will be encouraged to invest more, create more jobs and growth. We've not seen them do that since COVID. Now, what will the state governments do? They are probably likely to add their own cess a little bit to make up for their loss, but they'll also make more money from the luxury tax. Remember, what has happened since COVID is that the rich have become much richer in our country, which means there are more people making, upwards of, say, 50 lakhs to a crore rupees in our country, which means they will be paying more on their luxury items. And so state governments could perhaps have a compensation there because they'll be making more from the luxury items, even though they're losing a bit from the base of, say, 5% to 18% category that they were making earlier. What we're hoping for, I'm assuming what the government is also hoping for from all of this, is that we will be able to revive some portions of our economy, we will be able to hold on to some jobs, and we'll be able to cushion the blow from the fact that we now have that 50% tariff from our biggest global consumer, which is the United States. Now, there was, like I said, another problem with the previous structure was too complex. The fact that it is less complex will mean that it will boost compliance. Always the theory is, when if your tax system is not so complicated, people find it easier to comply because they are able to do it without too much difficulty. So hoping that that will also happen and more people will comply with the structure and there will be a clearer system. So that is effectively the big change that has come in from GST. So just putting it in a quick recap, your daily items will become cheaper. Your mid-level sort of aspirational middle class items will also from 28% to 18% become cheaper. And your super luxury stuff, if you're the super luxury kind of guy, then that's at 40%.